Since the beginning of the most recent week, the Canadian dollar reliably plunged down against the Japanese yen, JPY, and today with the cost lower than 77.00, the CAD may continue dropping even further. The adjustment in cost since the most recent week is about more than the 10 pips. The cost is confronting an extremely awful stage and persistently battling to return to its ideal level by and by. In the event that we explicitly talk about the present fall, at that point, it is a result of the awful conditions of the international merchandise trade that by the arrival of today announced its ELF at the cost of $-1.47 billion, which is very underneath from the most recent month's figure of $-0.73 billion, and it is additionally beneath the financial analyst desire for $-0.83 The statistics ca. Not a distributed international merchandise trade is the distinction in the estimation of its imports and fares of Canadian items, fewer intangibles, for example, administrations. Fair information can give a significant portrayal of Canadian improvement as substantial products and assembling contain quite a bit of Canada's GDP. On the off chance that a consistent interest in return for Canadian FA res is seen, that would transform into a positive development in the exchange balance, and that should be certain for the CAD and the other way around. To lift itself, it has the guide of help level that keeps it from falling as well as attempts to push it toward the forward, the principal flat help supporting it at 78.37 just underneath the cost. CADJPY is at this position is stacked with the number of protections that makes the weight from the upper side of the pair's value that not permit the cost to push ahead, as displayed in the figure over. The primary obstruction is the mix of TWO trend lines at 79.95. Conclusion. The present situation of the CADJPY can't, so disregarding the exchange rate currently is an insightful choice while the individuals who hold the stock may keep it, as the stock can possibly lift itself soon.